Tesla stock has something we call ignition permission, meaning that with the structure of the stock and its current position, there are a large number of institutions that validate buying more Tesla, hence ignition. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So the first part of our show today, we're focused on the fact that we have a friend of the show, Carlo, who has sent us a lot of material regarding the coronavirus and the fact that it could take 2 years to actually get it figured out. Why this is important, obviously, is that Tesla has a facility there, and this might affect sales both domestically and internationally. So it is definitely worth noting what's going on and understanding. The latest news that we've gotten is that the holiday was initially extended by 3 days by the Chinese government. And then the Shanghai government actually went ahead and has shut down all sort of companies until the 9th of February. So, we've at no point said this wasn't significant or it might not have an impact, but we're really starting to see an impact in terms of things that are happening in the line of what I just described. So we also wanted to sort of other data points are if in fact Tesla is currently at 3,000 vehicles a week. We first added 3, business days, and now we're adding another 5 business days to the shutdown. I believe that this means then that we've really, lost at least 1 week worth of production, but possibly 2. So in theory, from a production standpoint, if we believe the Tesla numbers, we're at 6,000 vehicles that might have been produced and sold that are not going to be done in that fashion. And then obviously that hits the expected numbers coming out. So the fact that the stock price is off slightly this morning, which is the 27th of January 2019, is not a surprise based on these changes. So at this point, all we can do really is anticipate or see what's going on, report it, and sort of work with the metrics that we can see versus the ones that we don't. And at this point, we're hopeful that the 9th is a realistic startup date for all of the activities, because even if Tesla could operate on its own, their suppliers still have to be able to operate in terms of delivering their aspect of components to get these vehicles moving. Anyone who has any sort of input or other ideas we should think about in this arena, we're happy to embrace. So the primary meat of our show is that it's sort of looking at the whole idea of Tesla now has ignition permission from some key investors. So what we're focused on is the fact that if you look at what's been going on with the Tesla stock price, there's an interesting phenomenon, which is there's a group of investors that represents 60% of the stock held. Those entities are called institutional investors, so they could be large pension funds, it could be large, mutual funds, for example, Fidelity or those guys. And when you add them all up, they're about 60% of the marketplace. What's interesting is that everybody now operates by models. So the challenge has been that the large institutions, particularly with a stock like Tesla, are in a tough position. If they wait till everything is known, they have the potential of the shorts or hedge funds moving way quicker than they can. But if they, on the other hand, don't delay and make sure everything's correct, those managers potentially lose their jobs if things don't work out as planned. So what we wanted to take a look at is just the fact that the concept behind permission for ignition is the fact that, as we've reviewed numerous times, what tends to happen is that a company will arrive with earnings. Those earnings arrive, and then right away the hedge funds are able to trade that information in after hours and into the next day, whereas the large institutions are really put in a tough position because they have to wait until they've got analyst reports to support their own analysis, and then they'll make moves to address buy or sell based on the news that's coming in. So our permission for ignition stems from the fact that there's a famous line in investing at a large level that says nobody ever got fired for buying IBM. So IBM for many years, perhaps not now, was sort of the blue chip standard for companies that you wanted to invest in because you could expect solid and continued earnings to come in that would support success by those investors who chose them. And if you wanted to be a successful investor and still get paid nicely as a money manager, your issue was buying IBM, whether they did bad or good, even if they didn't meet sort of outlandish expectations. There are good earnings that they would pay, and so nobody would ever get fired for buying them because they're a fairly safe choice. So now that we're moving into Tesla, what's interesting is the fact that you have a situation where we're starting to enter the realm where nobody will get fired for buying Tesla. We have things coming up like Tesla is already part of a number of indices. So, for example, the NASDAQ 100, and that's one reason why institutions have to buy Tesla. But as they meet earnings expectations or we head towards S&P, this will be another example of how buyers will be forced in, regardless of price, into Tesla over time. We also have the issue of the fact that there's a concept in investing called window dressing. So Tesla has enjoyed a nice run, and it's a huge company. So anybody that wasn't in on the run that occurred with Tesla will at least try to buy stock in anticipation, for example, of earnings to say, hey, we may not have caught the whole run, but we're in. So it's called windows dressing because you at least, put some of Tesla stock in the window to say that you were caught flat-footed. So what I'm angling towards here is the fact that there are all these different ways in which different very large investors are compelled to embrace what Tesla's up to. And as the fundamentals are determined to be solid for the company, particularly in terms of its growth, there's a lot of reasons for it to be purchased. The portion of our title regarding permission for ignition is the fact that when the analyst reports are written and the degree to which they apply to fundamental bottoms-up analysis, and the analysts are presenting that bottoms-up analysis that's excellent fundamentally to investors, you now have a situation where all those folks are saying, oh, wait a second, there may be many reasons to argue against Tesla, but with those kind of fundamentals, A, and B, with analysts supporting a higher stock price than they currently are at, heading towards the $800 number, all those little variables sort of playing in. So to some extent, the large institutions trail the market in terms of their ability to move, but it's also the case that the same institutions that trail the market are the very people, because of how much capital they have to put to work, that the hedge funds and everybody else is watching, because the metrics those firms use to determine what they're going to do, buy or sell for Tesla or hold, ends up getting baked into the market. It may not be 1 or 2 days after earnings, but as we've discussed, wait 3 days after earnings is announced, and that's when you really see the greatest impact that these large institutions have on the value of Tesla and any company's stock. So I briefly wanted to review some of the fundamental elements of analysis that play into Tesla, which most of you already know, but I just thought I'd review. Um, you know, Number one I have is the growth supporting the PE ratio. So one of the biggest discussions about why Tesla doesn't work is it has a very high PE ratio compared to other auto companies. And so therefore it's way overpriced. Uh, if you read, there's a book by Peter Lynch called One Up on Wall Street. And if you're just getting into the investment game, either Beating the Street or One Up on Wall Street is an amazing book. It's kind of one of the Bibles of the industry, written by Peter Lynch of Fidelity. And what he really talks about there is just the fact that whenever you look at a stock price, you're not really looking at, you're really looking at growth. So pretty much a PE ratio or price earnings ratio is the growth rate times the earnings of the company. And for tech companies, perhaps like Tesla, you sometimes have to go to growth rate of revenue if there's no profit as a way to sort of find another way to use this metric. But in essence, if you have Tesla somewhat doubling each year, somewhat meaning within 20% of doubling each year, those are the kinds of things that generate a very high PE ratio. And we think it's validated by the growth that they're enjoying, but it's kind of one of the arguments against. I have slow to show competition. The second element of a review of Tesla and where we are is just the fact, yes, there is competition, but Tesla is taking 80% market share in its segment, even with some of the largest players in the world claiming that they're going to be sort of after Tesla and successfully delivering competition in the not too distant future. Huge market for growth. Another metric that's key is while your company may be growing fast, how big is the potential market you're growing into? And as you can see, Tesla's been growing rapidly, and regardless of where it's headed, China, US, or in Europe, there's been an adoption rate at 80% is strong, but also the strong factor is that the rest of the EV business and then cutting into the internal combustion engine business is definitely a capability that Tesla enjoys and is exploiting. The next item that I wanted to look at is something that's called economies of scale, and just the fact that you have, with Tesla owning its own factory and it's the largest in the world, and they're pushing through more batteries than anyone, questions start to pop up about whether or not Tesla doesn't just have better scale than competitors, enabling it to make money where they might lose. So an example being, if you look at the Model 3, it's around $40,000. The packs that would be competitive or battery packs that would be competitive by competitors, their cost of pack is about $40,000. So for Tesla to be able to sell at that level with a 22% margin, at least in the US, possibly 35% in China, is pretty devastating for competitors who need to get up to that kind of scale themselves in order to become Tesla competitive, but they lose a lot of money coming after Tesla in the interim. Another element that we were looking at, particularly that's a focal point for Valley investors, or Silicon Valley investors, is something I call insane value proposition. So as we move into electric, there is no pollution off the back end because your efficiency is above 90% with electricity, where you're about approximately 33% when we're looking at internal combustion engines. So, another metric that we have all been impressed by is with the electric semi. Tesla is running approximately 20 miles per gallon in equivalent in electricity, whereas when it comes to ICE vehicles, you're looking at 5 to 6 miles per gallon in that iteration. So we thought that was another sort of important sort of illustration of the sort of better efficiency, if you will, associated with it. And then there's something that one of our viewers was really focused on, and that's called second mover advantage. So there are a number of new vehicles that are arriving to be Tesla competitors, not necessarily Tesla killers. And what's interesting about it is that while they are arriving, I guess outside of Rivian with what seems like a solid pickup truck and range, most of the vehicles seem to be handicapped to some extent, be it the ability to charge at supercharger, the amount of range that you're getting at the price point compared to Tesla, you know, the footprint. Do you have dealerships set up? There's just a large number of limiting factors for second movers, and in theory, the whole idea of second mover is you're able to take the principles of what the first mover did and then deliver a solution that allows you to, be very, very competitive, not superior to the first mover's advantage. And what this sort of brings up for us is a discussion of another Tesla advantage, which is called first principles of physics. So one of the big challenges that competitors are experiencing is that Tesla had the freedom to build a fundamental base, be it the charger facilities, be it drag coefficient on the car. There are all these optimizations that Tesla has done. And as we've stated before, you're not leaving a whole bunch of room for competitors to enter, because the question starts to become, from a customer standpoint, what is it that you offer that Tesla doesn't, as a reason for us to make that change? And to date, the answer in terms of the product offering has been usually the fact that they do have a dealer network that's attached to competitors. But other than that, there's really not a lot of, you could argue that Tesla's a decent looking car. The car is largely driven by the aerodynamic needs that are represented. You could maybe look at performance, but as we know, Tesla is delivering numbers that are pretty amazing, etc. So the challenge is that you're not leaving a lot of second mover advantages there for folks to come in underneath. And as a result, those second movers entering are not seeing a lot of traction when it comes to picking up customers. I guess the notable exception would be the Mustang electric SUV that's come out. We've heard a lot of sales numbers, but we haven't seen the car moving on the streets yet, nor have we seen any of those, sort of follow-throughs based on the early statements made by competitors. So I wanted to review all of those sort of Tesla advantages, not because the Tesla owners or people who study the vehicles are not familiar, but really sort of what's happening right now is everyone's trying to handicap how the large institutions will view Tesla's positioning. And as it's determined that Tesla is in, it's not bulletproof, but it has a lot of advantages from the angles that we looked at. These are the kind of metrics that the large institutions are using to assess short and long term how they handle ownership of Tesla. So obviously the earning numbers that come out on Wednesday will influence that thinking and process, but we look forward to sort of reviewing how and what those numbers are, and then in particular handicapping that against what to expect from large institutions after they are exposed to those numbers. And so we're listing this as ignition permission, because once you have analysts in mass elevating the target price for Tesla based on the fundamentals that we've been kind of looking at, you now have permission for these large institutions to continue to take positions in Tesla even as the stock price is rising. And then as they go and make their move, you now have the short sellers in a tough position, because they're going to have to make a call on whether or not they're able to hang on to their shorts, or having to jettison quickly in order not to get crushed in the stampede to buy the stock. So a lot of interesting information flowing Here, we definitely look forward to your comments and recommendations on story ideas, etc. We also want to recommend that you take time to like and subscribe if you enjoyed the show. We definitely could use help on Patreon if you would. I also wanted to note that we have our usual sort of health tips post-show. Wanted to encourage you to consider 25 leg lifts a day, each leg with a 5-pound weight. Also, no more than once a week for fried foods. Also wanted to encourage you to not go to bed within 2 hours of eating, preferably 4, to let the food digest, no acid reflux issues. And then, the 5-2 diet is another one that we've been adding to the list regarding just considering some kind of a fasting diet to help out, in terms of mental acuity, etc. So we actually look forward to any and all comments that are constructive. We definitely, enjoy the interaction in our Q&A afterwards. Our next show will actually be a live show. We found that alternating between live and non-live is helpful because it gives us an opportunity to really be focused on the show topic and not be distracted by the things that are going on. But like or not like, we definitely want to get your opinion on the process that we're doing. This is Greg for Teslafaninsight. Again, thanks for joining us. Please take time to like and subscribe and share. Also wanted to say goodbye in German. Tschüss, au revoir, French, lehitrot, Hebrew, Choda Hafez, Farsi, Srazvice, Russian, hello, Ni hao ma, Chinese, Hej do, Swedish, Do widzenia, Polish, and in Jamaica we say enough respect, Wak Woodman. Thanks for joining us. We look forward to our next conversation.